Jim Awad is with us now, Clearstead Advisors Senior Managing Director, and Scott Martin joins us also. He's a Fox News contributor. Jim, to you first.
Yeah.
Is this a break in the market? Because, look, hold on a second. Let me explain my point here.
Okay.
We've gone straight up since the president was elected, and we've gone straight up in this year, 2019. Is this the break point?
No, I think it's going to be a serious pause. There's every reason for the market to go down right now. We've always said here in our discussions over the last few months that the biggest risk that there was not a trade deal. So you don't have a trade deal, plus you have the Uber price action, plus you have the situation with Iran, and lurking in the background is Venezuela, Korea, and the fight between Congress and the president. So there's not a lot right now to make the markets go up, especially when they've been up so much and they're sort of fair value, not cheap. But I think let's assume for the moment that there is no trade deal, that the president concludes this is better for his re-election campaign to fight it out and to have a structural reform a year from now rather than do a deal right now. We'll adjust. The U.S. economy is strong enough to power through. The Chinese will make whatever. The world will grow slower and will have slightly higher inflation, and there will be dislocations with supply chains. But you know what? The U.S. economy is strong enough. We will still power through. We will still have growth. We will still have an up year in terms of corporate profits. And I would say I don't know what's going to happen short term. The interesting thing about today is to see whether the market closes at its low as all these algorithms kick in, or whether it's like Friday and you rally towards the close. But I will say that if you buy whatever this weakness is, 6 months from now, you're going to be happy.
Okay. Jim Awad says, no, it is not a fundamental break with the market. Come on in, Scott, for the same question. Is this a break point for the markets?
Not yet, Stuart. It's just another Manic Monday, to quote one of my favorite bands from back in the day. And I'll tell you, though, it's not a major break yet because this trade war, you know, even though it has heated up in the last week, hasn't carried on for many more months from this standpoint, in the sense of if this goes on through the summer, if it goes on in the fall, if some have predicted, then it's a break. Because let's face it, guys, there's still too much economic activity between our two countries here to just say, OK, we're going to shut this stuff off and go into a major tariff war. So in my opinion, the market is obviously falling out of bed on this. It's selling first and asking questions later, which is typical, as we've seen with markets that get to these recent highs. I think the Uber talk is a little bit of a red herring because Uber's just not a big enough component of the NASDAQ to push down all these tech companies, because there's so many great tech companies, as you know, Stuart, Microsoft, Apple's, Amazon's, that are making tons of money, unlike Uber. So to me, this is more the market just freaking out a little bit on the prospect that things may get worse before they get better with China.
I just want to break away for a second here because we took another leg down on the market. We're off close to 600 points, and that's because of Apple. Is there news on Apple?
Yes, it's a big deal. So the Supreme Court has ruled against Apple in the antitrust case relating to their App Store. Now, this could mean and pave the way for consumers for these class action lawsuits. iPhone users could say Apple has way too much control over the App Store because basically it's a monopoly. If you want to buy an app or use a program for your iPhone, you have to go through Apple, and Apple gets 30% of every app that's downloaded and paid for. So this is a big deal. Apple suffering also in the crosshairs of the trade dispute as well, since they get 20% of the revenues from China. Not a good day for Apple, which, by the way, is a heavyweight weighing on the NASDAQ and the S&P.
So Apple, the news on Apple from the Supreme Court could affect and will affect Apple's future revenue.
Correct, especially from their App Store, which is a big component and a big revenue driver for this company, growth driver as well.
Wow, Jim Awad, you heard this.
Yeah,
would you be?
You
wouldn't be buying Apple today, would you?
No, not today. But the market will sort this out pretty quickly. By the end of today or tomorrow, you'll see this factored into earnings estimates. We'll get new estimates, new growth rate estimates, and from there we'll be able to judge the future of the stock. I wouldn't bet. It's too early to buy it, but I wouldn't bet against it at this point. Right now, I would watch.
Okay, you said there is no fundamental break in the market. This is a nasty dip. Are you buying anything today?
Not yet. Not yet.
You're not buying anything?
Let it settle out. This is going to go on for a little bit of time, but I would say over the next few weeks, you're going to want to be buying if this weakness continues.
Okay, Scott, are you buying anything today?
Not today, Stuart, but I agree with Jim. I think there's going to be some great opportunities in the next few weeks. And let's put some other things in perspective, guys. I mean, we're back on levels in the S&P and the NASDAQ where we were at the end of March. You know, we basically have lost April, yes, Virginia, in the matter of a couple days, but that's okay. I mean, that's what markets do. They backfill after they've gone to very nice highs this year. But recently, Stuart, I'll tell you, as you know, we still love and own and are devoted to tech. But to supplement those positions, we've added utilities, we've added gold, we've added positions in the yen. Those are things that are doing well today when the markets are getting tumultuous. Those are things you should own going forward in a time like this.
All right, tell me about Uber. I see it at $37 a share today, a $70 billion company, or roughly $70 billion. I'm thinking about buying it at 38. What about you, Scott?
I don't think I'd touch it, not even with your money, Stuart, even today. I think what's happening, though, with some of these IPOs, other than, say, Zoom Media, they've come out still too pricey. I mean, the underwriters have mispriced these to some degree. And, yes, Uber's valuation has fallen to the IPO, so I would wait for it to come back in a little bit more before I touch it.
Would Jim Awad buy Uber today at 37
Not yet. There is too many questions about the road to profitability. And I think this is a sea change in how we value these private companies coming public. From now on, the market's going to be much more discerning and going to want to see a path to profits before they put a big valuation on them.
I just want to show everybody, we've got it on the screen right now, the NASDAQ is down best part of 3%. Yep. It's off 232 points. 7,600 is where it's at, so to speak. That is a gigantic loss. That is a very, very strong loss indeed. If you look at the Dow Industrials, we've got a loss there of 560 points. That's about 2%, a little bit over 2% actually. You're looking at down 2.1%. Same story for the S&P, and the NASDAQ now is down almost 3%. Across the board, this is a very significant sell-off. And the primary reason is China trade and tariffs. We imposed tariffs on Friday. China today imposed tariffs as of this Monday morning. Yeah. And that's what we got. So I got to say thanks very much to Jim and to Scott there. Gentlemen, busy day. Thanks for being with us. Very active day. Yeah.